And it looks like we are live. All right, welcome to the pilot episode of Mad Tendies. I have spent a week trying to get this AV set up, and I guarantee you it's going to blow up within 2 minutes. It's going to be a disaster. So thank you for anyone who's actually watching. We have already questions pouring in. What this show is about to be, what the show is supposed to be, is basically a call-in show, kind of a combination of Mad Money meets Wall Street Bets and Theta Gang. You're going to call in. We're going to take your trades. We're going to show up on the screen. I already have Robinhood up and running right here. See, it's not even showing up. So already, beautiful. Tasty Works. Is none of this showing up? What happens if I go like this? Will that show up? There we go.
Now it looks great.
Okay, so you just have to simply do it on a different monitor. There we go. So we have Robinhood. That's Tasty Works. Let's see. Robinhood, are you going to show up? Try it once more. There we go. You can see part of Robinhood. You know, the worst part is we got on an hour before to make sure that this would all work. And it already broke. It's already a disaster.
You know why this is the pilot.
This is why it's the pilot episode, and that's why it's not on your channel, because no one subscribes to me, and this is gonna be so terrible. But you know what? We're still gonna help out people with their trades, and let's take in the first one. Hey, Mikey, can you go into the Mad Tendies Submit channel, and I want you to pick out a trade that you like and or a question, and we're gonna help someone out today. We're gonna help them lose less money.
Well, I'll tell you what, though. What we need from the fans is that they start dropping Theta reactions on the trades that they want to see featured other than their own. Yep. That would help us decide. Because right now I'm looking through here. There's not a ton. But now, which one's the one that I picked? It's gonna have to be MTB Trailblazer.
Well, you know what? MT has a mic, so that means we could bring him into the audio. And MT, you can feel free to unmute yourself right now. I'm gonna bring up your trade, which is, it looks like you have a call credit spread. Is that?
It looks like bought the 21, sold the 23.
All right, I'm bringing it up right now. So we're going to go to Palantir, and he's on the April 16th. He bought the 21 and sold the 23.
Expiration.
Okay. Bought the 21.
Those are both right now. If I'm not mistaken, Palantir is trading for something like what, 24?
Oh, and this is a debit spread. This is
debit spread.
Yeah.
Oh, there we go.
Palantir is trading for about 24.
Uh-oh, we're hearing echo. What did we get wrong? Someone was echoing.
Might be on my end.
Okay.
So you're getting a lot of chat on the YouTube too. More people are talking on there than in the Discord chat.
Oh, they're welcome to. We said that all the feel free to chat.
But they just keep saying everyone's echoing. That's the problem.
Okay, the echoing is terrible. What is wrong then?
I don't hear any echo. So I wonder if it's my problem.
It's the YouTube video is echoing. Let me see. When y'all talk, and we'll figure this out.
Okay.
All right.
Did anyone else know what Mr. IV looked like? Well, now you know. The disappointment has already set in.
Getting echo from Mikey. So it's definitely on my end. I wonder why it's doing that.
You know what? Let me check Discord. Maybe you're not muted.
Am I still active on? That's why it's doing it. I'm not muted on Discord.
But you need to be muted. You need to be unmuted on Discord, or MT won't be able to hear you.
All right. So I can't mute myself on Skype because then it'll lose the audio from the YouTube channel. And I can't mute myself on Discord because then I can't hear you talking on the stage.
Hey, MT, can you hear me now? All right, MT, can you hear me now?
I hear you. Yeah, I have the YouTube muted because I'll go crazy with the 10-second delay.
Okay, 1 second. We're gonna see if there's no echo now. Hey, Mikey, can you talk to the audience and see if there's no echo now?
Yeah, I muted myself on Discord. I think that might have solved the problem. It's Mikey. Everybody's saying it's Mikey.
Well, you know what? That means that now our caller won't be able to hear us unless it's on delay.
Can the caller not hear us directly through Skype? Oh no, because there's a 10-second delay.
He can't go on Skype.
Look. All right.
Well, we'll still take his question. All right.
Why don't I just mute myself when I'm not saying something, and we'll see how much that helps.
Oh yeah, they were saying it was only you, so I could speak to the caller.
Mic off.
Okay, how about this? MT, what I'm going to do is... Here, Mikey, can you mute Discord for yourself?
I did.
That will prevent the echo. MT...
They're saying there's still echo.
Because you're not muted. Let me mute you. Boom. Okay. Testing. Is there no echo now? Or is there still an echo? This is just Mr. IV talking. There's about a 10-second delay, so I'm going to wait for the chat response.
My mic was like, so there shouldn't be anything coming from my stuff.
Right. I made sure to mute you from Discord, and... Oh, it won't let me...
Peasant is saying no echo. That's good.
Oh, that's good. Sign into chat. Okay. Sounds good. Okay, so here's the one thing we'll have to do. Callers, you'll be able to hear only me when you call in. Mikey, I'll have to relay his questions through that. So MT, let's look at your trade.
Out at some point.
We are looking at... Let's turn off Robinhood because you're making the trade on Tasty. We're going to go back to Tasty.
I respect myself too much to use Robinhood.
All right. So you have a... it says still Mikey echo. Mr. IV's voice does not echo. It only echoes when Mikey talks. So there's echo coming in from Skype. I don't see how that's possible. Oh well. We'll figure this out.
I'm muted on Discord. I can't see any reason why there would be echo at this point because I'm only talking on Skype right now.
Right, and there's no echo on mine. It means that somehow you're coming through on two different channels on my feed. Okay, we'll figure this out for the next call. But let's look at the trade.
All right, let's start.
So it's a call debit spread on Palantir with 27 days to expiration. It's significantly in the money. You get about $1.36 on... What if Mikey mutes Skype? Well, we could try that later. $1.36. What did you enter the trade at?
132.
Okay, so 50% profitability is going to be $1.70, $1.76 or so.
Yeah, 65 cents plus 132. Should be like $1.90 then.
Well, 132, and yeah. Well, no, it's going to be $1.70 or so. But so if you were to exit the trade today, you're only profiting a few cents. That's not where you want to be.
Nope, no, it's a brand new trade. I've only had it open for a day.
Okay. Oh, that's why. Okay, now it's making sense because I'm like, if you placed this a while ago, it should be significantly profitable since it's in the money. Okay, so the IVR on this is 5. This is going to be misleading. So I think a lot of people are entering debit spreads right now on Palantir because the IV rank is low. IV rank is calculated off a 360-day rolling average, and Palantir hasn't been in existence for 360 days on the stock market. So whenever you look at an IV rank of an IPO, it's actually not relevant. What matters is the IVX, what you're seeing here. We have 81% implied volatility. So in the future, I probably would have done a put credit spread. However, I think this trade is okay. You're still, looks like $1.50 in the money. So the general rule that I have in 2-leg strategies is you want to collect at least 50 cents per leg in potential profit. In this case, I don't know. The problem is you're going to have a big commission drag on Tasty for this. When you trade 2 legs, that's $2 in commissions, plus about, 35 cents in fees, $2.70. So your max profit when you made this trade was 72 cents, right? You said it was you made it for how much? $1.30 what?
Yeah. If I want to get out at 50%, that sounds about right.
No, but I mean, how much credit did you? How much debit did you originally take for this trade?
$1.32.
$1.32. Okay. So, oh, and do I have this right? You bought and sold. Did you buy the 21 call?
Let me. I bought the 21 and I sold the 23.
Okay. So the most you could ever profit off of this is 68 cents, right? Because it would go to $2. That's the width of the debit spread. Max profit on a debit spread is both legs being in the money. So here's problem one that I see. Number one is that you didn't get enough. There's not enough profit range on this. Because if you could only profit 68 cents and it's costing you 2 cents essentially in commission, then it drags down your commission drag's going to be a few percent. But ignoring that, let's look at what we have. We have 0.7 theta. We have the delta of this right now is at 66 and 80 respectively. So if this goes down $1, you're going to be almost challenged because this is going to go to about 20. Yeah, this is you're not going to be challenged until you go down about $2.50 till you hit your break even. So you have quite a bit of wiggle room. I would say what you need to do is wait 2 weeks. It's 27 days to expiration. I'd say at 14 days. And you either need to roll out to the next expiration or take 50% profit. So what I would normally do in this situation is you click close on this trade. So if you had it, you would right click and then it would be a close at 50%. And you put that as a good to cancel order. That way, if you don't wake up at like 6:30 a.m., at least on the West Coast here, when you do a trade, it'll automatically close it. And this is a decently liquid chain. Palantir, you're not going to get what I would call... you're not going to have too much slippage where you have to worry about it getting filled prematurely. What I would do today is put in a GTC at 50% profit and set an alert that Palantir does not go below 23, which we could do here by going to alerts, go to Palantir, set the alert email to 23 and say less than, and then create an alert. And that way you will get both a push message and a text message when Palantir goes below this, which means your long leg right here, or your short legs on the dance floor, which, as you know, once it goes beyond that, it becomes difficult to roll vertical spreads. So here's your 2 ways out of this. One, you're going to wake up one day and it's going to fill, and you hit your 50% profitability. Good for you. Winning trade. Otherwise, you're going to wait 2 weeks, and this isn't going to be 50% profitability. When that happens, you roll out to the May 21, and you might be able to even go down because it's a debit spread. This is right now at the 21 and 23. You might be able to roll out and down, which will bring you to the 20 and 22, which is going to increase your chance of hitting that 50% profitability. Only do that, though, if it's not going to cost you a debit. So that's step 2. Step 3 is when you get that email alert. That's when this trade's in a little bit of trouble. You want to then immediately roll out and down to the May expiration. That's going to be your salvation, because once the stock like Palantir starts trading at 22.5, 20, you're gonna have no extrinsic value to roll against, and that's vertical spreads. Once they've been breached, aren't as defensible as a naked option. So you have to be kind of proactive when you're in this last 2 weeks of a trade. So those are your 3 plays of you want to put in a good to cancel order, 50% profitability. Number 2, you want to put an alert on your account that it won't be at less than 23, which is where your short leg is. And number 3 is once you get in 14 days to expiration, you want to roll out to the May.
Cool, thanks, man. I had the good to close order already in, but the alert was a great idea. I didn't even think about, and Palantir can't go down, so I'm not worried about option 3.
Hell yeah, I got, let me go to my IRA. Let's see. Palantir. I have 300 shares. They're all covered by covered calls. I have one that's about to the $30 covered call that I'm going to roll forward. Right now, they're kind of short expiration, which got me some good theta, but I need some more premium, so I'm going to be rolling out to May and June because I'm starting to like the idea of the 60 to 90 day covered call. People are saying definitely lag. Okay. Damn. Let's see. Oh, and Mikey's talking and I'm not hearing him. That's not good.
I wonder if it's your I wonder if it's your upload or something. I wonder if you don't have enough juice to send it to YouTube.
Despite living in North Idaho, I have a fiber connection.
Oh,
so I should be able to. Okay, let's get Mikey on in audio by going to Discord. And you know what, Mikey? Right now you are.
Hey, how's it now? Can you guys hear me?
Yeah, I'm gonna turn your audio off in Discord. In Skype because that's where I think we're getting the echo effect. So let me go there, and I'm going to mute myself there. Boom. You won't be able to hear me for a second. Mikey, I'm gonna now unmute you, and you need to right-click me in Discord and go to volume and set me back to 100% because I was at 0% for a bit. And you're still muted in Discord, Mikey. So, Mikey, I need you to unmute Discord. Let's see. How do I do this?
Hey, can anybody hear me?
I hear you now.
Yeah, yeah.
All right, this shit's like completely broke. I can't see or hear anything on Skype right now.
Beautiful.
I should just log out and try to log back in.
That's gonna break even more stuff.
Can't hear IV at all.
Is Mr. IV's PC adequate for streaming? It's 5 years old, so maybe it's starting to show its age. Call ended. Oh no. Oh no, we lost Mikey. Well, while Mikey waits to reconnect, we're going to take another call. So I'm going to hit cancel on here. I'm going to... Let's take this question by... Who's the first person? Chloe. Hey, Mikey, you're back on Discord. Can you unmute yourself in Discord? He can't see this. Mikey. All right, I'm going to ask the chat right now because so the problems that you're seeing. One, is the audio fine? Two, is it just delay of when I'm moving things around on the screen? Because if it's delay on that, then I can
there we go. I got you
slower. Now. Okay, Mikey, you're coming in now on my audio, so I want you to speak to the chat for a bit while I set up the next trade.
Yeah, I can't hear a thing. Oh, your volume's at 100. I still can't hear you though, barely.
You could barely hear me, or is this better?
No, I have him at 200. 200's good for him.
Okay, send me to 200 then.
Can't go above 100. How do you change above 100?
People are asking about Skype. Oh no, it says back to echo. Oh no, oh no.
God, damn it. I'm not even in Skype.
You right click their name and you drag the slider all the way to the right. 100's in the middle, 200's all the way to the right.
Oh, well, it's showing me user volume 100 is the max. You have to be like a server booster or something for that?
I'm never giving Discord a penny, so no.
We can hear you. No echo, now huge. Does that mean the echo?
Yeah, because I'm not in Skype anymore. That's why I'm not even on the call.
Here, I'm going to kill Skype. That means your video is going to be frozen because fuck this interface. Quit Skype. Okay. I'm going to drop your, your camera. This is absolutely thrilling tech support I was hoping for. Yeah, Logan, this is the place if you want to see a boomer try to stream stock trades. This is
and make that two of us.
Yeah, I'm really glad I invested that whole weekend last week to get this all set up. It looks like it's going as perfect as I imagined. But I'm going to
trial by fire.
So I'm going to take on Hevol's question. Is that he's a new trader with $6,000, whose only trade so far has been negative 720 on GameStop. Oh no! Which Theta play would you suggest? Well, Mikey, you know what? You address a lot more beginner traders than me, so I like you to answer this first, and we'll see if there's echoes.
I can't even see shit right now. I don't know what the fuck is going on.
Oh,
that one back to me again. We're gonna do this. I'm gonna do this blind. Me, what's the trade?
Here's the question. Hevol is saying, I'm a new trader with $6,000. My only trade so far has been negative $720 on GameStop. Which Theta play would you suggest?
All right. So he's got $6,000 and he's made one trade so far. All of it was losing money on GameStop, basically.
Yes.
So clearly he's caught up in the hype. And I mean, we see this type of thing all the time. People are getting started and you don't really know what to do. So you're following the people that are in front of you. And often that includes Wall Street bets. First and most important thing is to stay cool. You're not the first one to lose money on their first trade. So here's what we need to do. You want a Theta strategy. I'm going to recommend half your portfolio right now. 6,000 is a pretty good start. Take 6,000 and throw it into one of the indices. Pick your favorite, whether it's SPY, whether it's Triple Q. Pick one of those and take 3,000 and drop it in. And that's it. You're already ahead of about 90% of your peers. Because I guarantee you most of your friends aren't even investing. So if you take 3Gs and throw that into an index, you're doing great already. You've got 3 left, or well, a little bit less than that now because you blew it on GameStop, but you've got about 5 and change total. So that would leave you with about $2,700. You know, I'm tempted to say, based on the fact that you're a new trader, you shouldn't go for any of the vertical spreads, or I'm sorry, you should go for the vertical spreads and try to avoid PMCC right now. Because normally for most people, I'd say, hey, take a cheap stock, like one of the airlines or the cruise lines that you're confident in, and throw it into a PMCC. But the fact that you've actually never traded options before means you got to kind of start at the basics here. I think the put credit spread, the call debit spread are probably the way to go right now. The trick is going to be to find a stock that you actually like and you want to see or you think is going to go up in the future. I'm partial to, what do I got open right now that might actually work in your favor? Let me check my positions here. We've got, I think Palantir right now is actually at a buy price. So you might be good to go with a put credit spread on Palantir, slightly out of the money. Basically the opposite of similar to what we just saw with MT, with the reverse position. So taking on a put credit spread instead of a call debit spread. I think Snap is potentially in buy range as well, even though a lot of people there don't like it. A lot of people here don't like it. And
I'm pulling up what you said before. If you want to do a put credit spread on Palantir, the 22.19 put credit spread, you could collect more than a third of the width, and you'll have a theta of 0.6. I'd say that's a pretty high probability trade and around 73%.
Yeah, I'd give it. I think I think Palantir is actually going to start finding support in the lower 20s.
I agree.
I'm still long on Palantir right now, so there's a lot of speculation around what that company's actually going to end up being. What's it going to do? I think based on the hype alone and the speculation about what this company can become, I think you've got a pretty hard floor at around the 20s, or the low 20s, like $20. I don't see this thing going back into the teens again. I'll eat my words if I'm wrong. But that would be a position I'd recommend for you.
Yeah, you mentioned Snap. Its IV rank is 30 with earnings coming in April, just after April 16th. If he was to do the 50-45 put credit spread, he'd collect 131. That's a theta of nearly 1, a P50 of 77%, and a chance that you might be able to close this trade out before earnings if IV were to if the trade were to go your direction immediately.
Yeah, I mean, I think we're going to see some strength going into earnings personally.
I agree.
The amount of positive guidance we've seen out of Snap so far has been huge. I mean, you got like, what's his name? That billionaire, Evan Spiegel or whatever. Every time he speaks, he's got more good news about the stock. I mean, I remember selling Snap at about $8 or like $9 or something like that during the crash around this time last year. And I regretted it since then, pretty much all the time. But I'm back into it now. I got in the upper 40s. I'm pretty bullish just based on the guidance alone. So if you're looking at an opportunity to get in on a high probability trade, I'd go with either the put credit spread on Snap or on Palantir. Those are what I'm trading right now, too.
I'm going to give you one warning on Snap. Right now, the ad industry is facing some challenges with advertising identifiers. Right now, China is kind of thrown a wrench into this, in which they're trying to stop Apple's plan to block advertising identifier, kind of owning that entire ecosystem, which was putting social media sites, but most importantly, internet advertising at risk. So whenever there is... even if there's now hope that China is going to move in this direction, which will block Apple from doing that, which is in Snap's benefit, even though they don't operate significantly out of China, whenever there is uneasiness or people aren't sure which direction things will go, similar to what happened with Brexit, in which regardless of the economic impact of it, knowing that Brexit was finally going to happen, pushed the pound up because people didn't have to plan for two different contingencies. So I would give you a bit of warning with Snap, but I think right now, I mean, it has dipped, so you might be able to buy into the strength. And if you're selling the 45.50, it has to dip 9.5 points for you to lose money in 60 days. That means the company has to go down nearly 16%. So time is on your side. That's one of the great benefits of Theta Gang is Mikey doesn't have to be directionally correct for him to make money off of this trade. He just has to be not significantly wrong.
Yeah, I mean, as far as, my ability to stock pick goes, I'm probably right like 60% of the time as far as which direction it's going to go in. I'm not that good at picking stocks. What I am good at is picking where the floors are. So if I'm wrong about the direction I think Snap is going to go up, if I'm wrong, but you're looking at a 45.50 or even lower than that, you can be wrong by 15% and still end up making money. So that, I just boosted my odds from 60% now to 75, if that kind of makes sense. Like, that's how I think of it, how it tracks in my mind.
No, I mean, that's exactly how it works because when you're trading Theta, you don't have to be right in direction. You just have to be not wrong in direction. So if the stock trades flat, you're winning that trade every time because you're $5-10 out of the money off of your put credit spread. That's one of the powers of that type of trade. All right, I'm going to pull up the next one and understand that Mikey's going to fly blind, so it's going to be a little more difficult. Maddie, and I'm looking at my television set to do this. This is how boomer the setup is. I had to run an HDMI cord to my television set so that when Mikey was on Skype, it wouldn't interfere with you guys seeing this. And the reason I'm using Skype, yes, I know it's boomer tech. You could make fun of the boomer setup that I run, is that it's the only one I am aware of that does native NDI. So I could pipe him through directly to Streamlabs without having to do a window capture. So Zoom is far easier. I use Zoom at work, but this is just a horrible tech setup that I have. So B. Maddie says, I bought a call on April 16th for Palantir at the 30 strike last week. He's down 60%, and he only has $700 in his account. Okay, what would you guys recommend going forward to reach 2,000 in account to have access to tier 3 options for Theta Gang? Because 2,000 is the FINRA requirement for margin. So he's on TOS. He's down 60% on the April 16th Palantir call. So I'm going to pull that up on my screen. Funny enough, I think I also have some April 16th Palantir positions. Did he say?
I thought you were a Palantir bear.
Oh, no, I'm a Palantir bull. I've been perma bull.
Okay.
I bought in at the IPO level.
Oh, did you? No shit.
Yeah.
Good for you.
Yeah, no, it's one of the few things I've been incorrect on this year. Look at this. See this negative? You can't see this, Mikey, but I want other people to see this -1. B. Maddie is the counterparty on this trade. Now, granted, there are no counterparties. There's an exchange. This is done through an exchange, but B. Maddie bought this 22 delta call because he was bullish on Palantir. I did the opposite. I had a very Theta gang strategy. I have a cost basis at around 25 since I lost a lot of my original shares and had to rebuy back in. And I sold a call at 30. That means that as long as the stock is trading above 23 and a half or so, or 23, I'm making money. And with him, he's going to lose everything if it doesn't go above 30, which means it has to go up 20%. So what I would do is I would sell, even though you're down 60% on that position, sell it, and you'll still have $700 in your account. The best way to get 2,000 is not to double up 700 twice in a row. It's to slowly build equity. So what I would like to do with 700 is, let's see, you could do level 1 options or level 2 options in terms of selling a covered call on a cheap stock. Otherwise, you might have to start just depositing maybe $100 every month and building that up, or maybe $50 a week. So let's look at some cheap stocks that are under $10.
I'd like to add to that.
Yeah, please do.
I think I started looking. So with a $700 account, you're buying out of the money calls on Palantir. So you're taking on quite a bit of risk right off the bat. I assume if you've got $700 that you're also fairly new to this. So the quickest way to get from 700 to 2,000 is to deposit $1,300. And if you've got resources available that'll let you receive free cash flow, like you have more money coming in your personal life than you do in expenses, then focus now on not trying to make 200%, rather on making deposits over time that'll get you to that point. Unless you're willing to really roll dice, and it's going to be really tough to go from 700 to 2,000 with any kind of speed. Focus right now on making the deposits and learning how to make trades using vertical spreads. That way you'll have a much better chance seeing profit each time. But also, you don't have to put quite as much money on the line in order to try to receive a decent return on it. Does that make sense? You know what I'm saying?
Yeah, the big thing that he's playing behind the 8 ball if he can't do spreads with $700.
Oh shit! Did he not do spreads with that? They wouldn't approve him for spreads?
Let me check. MT, can you oh no, it wasn't MT. It was B Maddie. Can you in a different chat window, as say if you have access to spreads or not? I'm going to check. So in the Mad Tendies chat, can you ask can you say if you have spread access? I'm guessing he doesn't because it sounded like from his toss settings he didn't, but we're going to guess.
If he has access to spreads, then vertical spreads would definitely be the direction I go. You could also use, if he's more familiar with four-legged strategies, you also have the condors you can take advantage of.
Not at a $700 account, though.
You're not going to approve him for that, no.
Well, no.
When you're working with an account that small, you're pretty limited in what options you can do. And I guess if they want to approve you for level 2 options so that you can buy naked calls, then you're almost being enticed to take high risk.
I know,
and I don't like that.
It's such a terrible set. I mean, that's what this all happened because of the '08 bank crisis. So Legends. Oh, B Maddie is now telling us he's in high school. That doesn't help us. That's not the question we were asking. Well, maybe that.
I'll tell you what though. On the positive side though, starting investing in high school with even $700 is ahead of the game already.
Oh, dude, yeah,
so
he's gonna kill it. Even if you blow up the $700 and that's like your cost of playing the game, you're gonna learn so much from this. But okay, I'm gonna assume you don't have spread access. You can do covered calls. That you could, like, I have a stock up here, Resin. It has earnings. It has super high IV. I don't know what the hell they do, but you don't really have many options at this point. You could sell a.
You know what, dog? What about this? Think about this.
Yeah.
About buying Nokia below 4 and selling Nokia above 4. Swing that. I mean, we've been seeing Nokia go from like 380 to 420 for like 6 months.
Oh yeah. So while it does violate
that's an option too,
rule, yeah. So with half of his account, he could buy the 4. Will they allow him at level 2 to do cash secured put?
Yeah, level 2 you can typically do cash secured
I
puts.
think they should.
Level 1 being just covered calls.
Oh, okay, here it is. He needs margin for spreads. Yeah, that's correct. So he's on a real platform. But on any real platform, you actually need margin access to do spreads. Otherwise, you can't take short assignment. Robinhood's the only company I've ever seen that allowed spread access without margin. So here's if he can do a cash secured put, he could write a sell a $4 put, which is at the money on Nokia, and collect 33 cents on the May 21. And that's going to give him an 83% chance of being 50% profitable. And yeah,
Yeah,
you're gonna lose some money on commissions, but if you don't have spread access, you're basically having to put all your money into one play. So it might as well be high probability. That's
generally the direction I would go with it here. I mean, if he says he's not even 18, so he must be using a custodial account or something like that.
Oh, custodial accounts can't even have
fact of the matter is here that if we were talking about somebody who was like in his 30s, he's got tons of free cash flow, but he's just getting started and getting his feet wet. I'd say it's a little bit different situation. You can afford to take more risk. Right now, the priority here for B. Maddie should be focusing on deposits and learning how this is done. Right now, I'm telling you, he's not even 18 years old, and he knows what a spread is. That's like top 1% of teenagers, because nobody knows about that. So I would play something on Nokia, whether it's just buying shares below 4 and selling them above 4. Yeah. If you can get in on spreads, then you've got an opportunity there to just buy and sell the $4 covered call, wheel at $4 basically. Then you're getting, free cash flow that you can throw back into shares of something else.
Yeah. And
it's the direction I'd take.
I would also be doing a side hustle and trying to get like $50 a week or $50 every 2 weeks into this account and build it through capital rather than trading. Like, I'm looking at the ETFs. The only ETF that's really tradable for him is something that you really shouldn't do with options, which is UVXY. Any type of leverage product with options has a form of elasticity that I don't think so here's the problem. The VIX is an elastic product. It naturally kind of contracts to 15 if you're above it, or expands if you're below it. When you have a scalar on it with leverage, which UVXY does, then it essentially functions like JDust or JNUG, which regardless of gold's direction, in 5 years, both of those will be at 0. The only way that they stay tradable is through reverse splits. It doesn't matter if gold is going to go up 400% in the next 5 years, because it does daily re-averaging. It's not meant for intraday trading. It's not meant for interday trading. It's meant for intraday trading. So UVXY, if it were never reverse split, it would go to 0 within maybe 6 months from now. That's just so I would stay away from that. I think you know what? I'm going to go with Mikey's idea. I like the Nokia trade. One, you're going to be able to read a hell of a lot about it, because Nokia is going to be in the news every week from now, because it's a GameStop, it's a WSB meme. Ultimately, you want to get to $2,000, because once you have $2,000, the whole world opens up, because then you could do $1 spreads, and you could do them the strategy I recommend to people is every 2 or 3 days you open up a new $1 spread, and you do it in the opposite direction of your last one. So if you just did a put credit spread on SPY, then you do a call credit spread on QQQ, then 2 days from now you do a put credit spread on USO, and you just alternate between, let me go to them, it's the highly liquid ETFs. So like you would do silver on Monday, then you would do Mexico on Wednesday, then you would do then you would do Friday, you would do Brazil, and then the next week you maybe do the diamonds or QQQ. And it's going to give you a fully diverse catalog of what's great is that once you have about 10 positions on, you always have something to do every day. Like you're going to adjust positions, roll them, that kind of thing. You don't need to be putting all your money on the line every day to have a lot of action. You just have to slowly put on trades and manage them. With Theta Gang, it's not about day trading, it's about month trading. And putting a position on so that 2 weeks, 4 weeks from now, it either wins or you manage it. So I see a lot of people race to put in all $700 of their account or all $1,000. And granted, in his position, because he can't do spreads, he's limited. But if you're on Robinhood or if you have more than 2K, you can slowly put on half of your account over the course of 4 weeks and have a really interesting portfolio where there's always something to do.
Cool. I'm with you.
All right. I'm going to pull up Discord.
Hey, Ivy, you're going to kill me here, but I don't think the baby's going to give me more than another minute. So she's starting to get very upset, and my wife's not home to take care of her. So I'm going to need to
You have to drop out. I mean, this is the... your video's not even showing up, and you're not even able to watch my screen. So
yeah, we've clearly got some stuff to work through.
Disaster. I'm giving.
But you know what? I mean, this has still been pretty cool, though. You know, even though we've had some technical issues and I got to ditch pretty early, it's still been pretty cool. I think this is a really good idea. So I will be looking forward to once we can really get this on track and we can actually see each other, and hopefully next time we won't run into baby issues either.
And you know what? Maybe next time I'll just run it through Zoom and I'll do a window capture. It's simpler.
Yeah.
It won't look as good, but it'll probably work because
you know what? It'll look better than this.
Skype is Zoomer tech. It's Boomer tech, and obviously in the Zoomer world you can't use it. Hey, take care, Mikey. I'm gonna handle the next few questions.
Alrighty, thanks, brother. Take care.
Yep, see ya. And I'm gonna see if I could chat in here. Sign into chat. Open web browser. Okay. And I apologize, I wasn't able to chat before. Test. Let's see if it shows up. Beautiful. Why doesn't it let me do it in Streamlabs? Okay. I have to open up a new window each time I want to do that. Great. This tech is beautiful. Let's go to the next trade. We have Rob Knight asking, when you're short a naked call and it's getting murdered, much like my GameStop play, do you FOMO and turn it into a call spread? Do you sell puts on the position or just roll it in the horizon and keep building the credit? I'm short a call on DraftKings. I decided to FOMO a put spread, okay, and I'm fine with rolling it for a while, but I could see it going to 100 because of Crazy Kathy. Yeah, she's big into DraftKings and she has a lot of money on her hands, so let's take a look at that. Okay, you didn't say what call you sold, but let's just assume it's the April 16th and it's deep in the money, so it's the 60 call. So it's going to cost you $13.10 to close this, and you don't want to do it. I'm going to show you, I don't think I've seen many people on the server try this, but what you do is you need to get $13 in credit to save this, because we never roll for a debit. So here's your strategy. You're going to roll up and out in that, you're going to roll this out and you're going to make it into a strangle or a straddle. So if we take the 60 call, we can get, let's see, it was 12 bucks that we need to get from this. If we turn this into a 70 straddle, we're getting 16 bucks. So you're going to get $4 in credit, and you actually have a wiggle room to the up and down side and a ridiculous theta, like 12 theta. So this is going to just tick away. Now, granted, it could get whipsawed. So if it goes down 10 points, you're going to be like, oh, I wish I didn't sell that straddle. But I'm going to show you one other thing. What if we were to make the call go up to the 75? We want to give you some wiggle room. You know what? Can we bring it to the 80 and this to the... Oh, that could kind of work. Yeah, here's what we're going to do. You can roll for a tiny credit and turn this into a 75-65 strangle on May 21st, which isn't even an earnings play. And what it's going to do, let's go to the analysis. Now, keep in mind, because I'm entering this trade fresh, it's going to show profitability from the 55 to the 85. Your profitability window is going to be much more narrower because you're kind of rolling this in and you're coming in at a loss. But what I would do is, this is going to give you the problem right now is that essentially you have a deep in the money call, and that means you're significantly high delta. So you only benefit from one direction. You need to benefit from time and lack of direction. So if you have a 65-75 strangle and it finishes in between this, you're going to get out of this trade without losing any money. In fact, you'll make about 60 cents. Now, the odds of it staying within 65 to 75 is going to be small. This is a very narrow strangle. But let's go into the trade and look at the table and look at the odds. The chance of this finishing outside of the money is going to be, it's not going to be good because it's basically of this being in the money. So let's switch it over to in the money. Or I don't know of a good way of doing this, but basically I see it as a less than a third chance of being pinned in here. But you're already $1,000 behind, so you have almost no chance. Like, let's go back to the old position. The chance of this being out of the money is what, 10-15%. It has to drop down 15-20 points. So you're already screwed. This is going, but look at the theta that you have of the old position. It's going to be theta 5. Look at what I'm taking you to by turning this into a strangle. 12. That means every day that passes, you're going to be getting more than double the decay of this trade. Mostly because there's two different sides. You're playing both the put and the call side. It's not even going to cost you any more buying power to do this, because a strangle versus an in the money call is going to have the same buying power requirement. So the play that I would do when a call goes significantly against you that you sold, same thing with a put, is you sell the other side and you try to roll it so that you try to roll your tested side a bit more to be delta neutral. Like right now, the delta of this trade is -20. Before, let's look at what your trade was. The delta of your April 16th, if it was at 60, is going to be -87. So we were able to make your trade more neutral, more theta positive, and give you a higher chance of getting out of this trade in the next couple weeks. We're not giving you a better than 50%. Once you've been blown up on one side, there's just not going to be a way to save it in a high probability way. But there is a way to make it so that every day is going to be safer than where you are. So I'm going to look at the chat questions right now on YouTube. Can I just verify that we're still going live, that you guys are able to hear okay? Someone's asking about their silver straddle. It requires about 350 of buying power. That's a good point, Num. But you need, in order to perform the straddle, you do need, what do you call it? You do need level 4 options, and you do need margin access. Let's go to the chat, see what other questions we have. Let's see here. Oh, I haven't seen chat in a bit. Okay, new question. I have $3,000. I want to start with PMCCs. How do you pick stocks to start with? I'm inclined to start with Palantir. Ooh, good question, because Palantir is actually not where you should be starting. A PMCC benefits is a two-dimensional trade. First of all, on YouTube. Oh, is the reason I'm not seeing on YouTube is now that it's in here? Oh, it is. Yeah, it's now in my website as opposed to in here. Okay, but anyway, this is from Sadir. He says he has $3,000. He wants to do PMCCs. How do you pick which stocks to do it with? Okay, so a covered call is not the same as a PMCC, in that a covered call is a one-dimensional trade. It's basically a bullish trade where you benefit from theta decay. and you trade some of your upside in order to benefit from theta. A PMCC is a two-dimensional trade. It is benefiting from both theta and from vega. So it is a diagonal trade that benefits from increase in IV. So when you go to Palantir, look at these IV numbers. Can we check the chat? Are you able to see these numbers here of 81%, 87%, 89%? Are you able to see how big the IV is on this stock? Let's see. I'm going to check to see if we're getting a response. I don't know if I'm not logged in properly. Oh well. I'm going to pretend you can see it. So Palantir, this is misleading. You see this IV rank of 5, and you think, okay, well, it could only go down to 0, so I have a 95% chance of Vega going up. That's actually not right. The IV is 81%. The IV rank is 5 because it's having a difficulty calculating a 360-day look back on a newly traded stock. See this IV of 81%? Let's go to SPY. The IV is only 27%. So IV can definitely shrink down. Or if we go to Ford, it is 50%. So Palantir can easily lose Vega or volatility. And a PMCC, even if you're directionally correct, your long leg might lose significant value if it is a PMCC as opposed to a CC. Let me show you the difference. So let's look at the May 21st. It's trading at 24. So we're going to sell the 30 and we're going to buy the June. Let's buy the June and we'll make it a 70 delta. Boom. That doesn't seem right. Should be more of a debit. Oh, probably there we go. Okay. So if we buy the 21.5 and we sell the, where is it? And we sell the 30, when we go to the analysis, you see this like up and to the right, and this is going to be so misleading because you're thinking, well, as long as Palantir goes up, the PMCC goes up. That's not true. The delta is going to be as important as the Vega. So if Palantir goes up, its volatility will go down typically, so it's going to be working against you. The PMCC works best on stocks that are not that volatile, because put it this way, it would be like doing a debit spread on Palantir, where let's go to the trade and hit clear. If we were to do a debit spread on Palantir, boom and boom, it might look like a good trade on paper, and I think our very first call was something like this, the 2022. But if IV decreases as the stock goes further, then this also decreases in value, so you have to hold on to it a bit longer. You don't enter debit spreads on volatile stocks. You enter credit spreads. So the PMCC is not what you want on Palantir. Here's another thing. Palantir is only trading at 24. It doesn't cost that much with margin to be able to do a covered call. I'm going to show you how cheap it is. An example in a margin account. So we're going to pick strategy here in Tasty. Where is it? Boom. We're going to do a short call covered, and we're going to put it out in time to a May 21st. And we're going to move it down to the, there we go, the 30 delta. So this is going to cost $2,300. Well, on margin, it only cost $1,150 because you could notice how it says, oh, this is a broker. Oh, wait, no, here we go. Estimated buying power effect, only $1,000. So by writing a covered call on a stock like this, you're able to secure $700 of upside if it were to breach 32 at only $1,000 in buying power, because the cost to buy stock is only 50% of the underlying. The rest is marginable. Now, granted, the margin counteracts the theta in that the interest that you pay on stock that is borrowed on margin is 50%. So it does work against you, but it's not as bad as the theta. The theta definitely overpowers it. So if you have an account of, you're mentioning 3,000, 4,000, consider maybe on a stock of $20 or $24, doing a margined covered call rather than a PMCC. And we're getting let's see, what was the theta of that? 2.5. That's $2.50 a day of theta for only $1,000 in buying power. That's pretty efficient. That means for every 350, every $400 is getting you $1 of theta, and you're probably paying maybe 10 cents of interest off of that. It's not too bad. I like that trade, but I don't like it as a PMCC. That's why in Palantir, if you go into my account, you'll notice that Palantir is a covered call and not a PMCC because it's very volatile. We're going to take 2 more questions and then call it a wrap because we're about an hour and everything has gone horribly. So I apologize for all this. I thought that the production value was going to be through the roof, that this was going to be like a ninja level, like podcast and everything, and now it's just going straight to hell. So Twinkie is asking, would you recommend swinging something like Nokia with a level 3 non-margin account with $1,300, or would you sell high covered calls in high IV stocks like Sundial? Okay, here's the weakness with Sundial. The covered calls are lucrative because people think, because the way the put call skew is, that the deltas are basically saying that this stock is going to go down. And for good reason, because let's look at the, wait, Sundial's SNDL, right? Let's see. Yeah. Trade, Sundial. Okay. I don't know why I'm not seeing a grid. I'm going to pull it up on here. Let's take a look at Sundial. Oh, you're kidding me. Okay. I'm going to pull it up on a web browser. I want to show you the Sundial, the chart of the last 30 days. There we go. Nobody's seeing this crap. Okay, let's go to Tastyworks, turn that off. Robinhood, turn it on. There we go. All right. Sundial is essentially a penny stock. Its market cap, I know it's $2.5 billion, but only a month ago was trading at 50 cents. So when you look, this is about where it should be from a delta perspective. When we pull up the options, you're going to notice that selling a $1.5 put gets you 50 cents in premium, but the delta is only 35. The 50 delta is all the way here because of the put call skew. So if you're to sell the $1.5 covered call, the mistake that you're thinking is, well, I'm selling into I'm selling into strength. A covered call is still bullish. So a 60-day covered call is going to profit as long as the stock stays above 1. And I don't know if it's going to stay at 1. If your account is this small, is it a risk worth taking? Yeah, I think so. I personally would like a little more wiggle room, but let's take a look at it. 1.5, You buy 100 shares. So let's clear. Boom. I would not sell it at 2. I'd sell it at the money. You want as high as a profitability chance as you want. So for $1, you could buy 100 shares and sell the 1.5 covered call. That's going to give you a low, not a great theta, but it's not going to cost you much. It's going to cost you $100 to get 0.3 theta. That's $300 for 1 theta. Boy, without the margin, there's just not as many moves that you could do. Let's look at this. The risk reward is exactly where it needs to be. Risk 2/3 to gain 1/3. The P50 and the chance of profitability is low because when you look at the Greeks, it's saying that this stock is going to 1 within. It's going to go. Let's look at the volume. I want to see where it's at. Oh, you're kidding me. Look at this. It's all gambling. Look at all these $4 calls. Oh, boy. If you have that little, is this the move you want to make? The book says no, but I see why you're doing it, and I don't think it's the worst trade on earth. But I'll tell you, what the book says on here is you have level 3, you don't have margin, but if you have level 3 on Robinhood, you can do spreads. No, you don't want to do this. I know it's tempting. Like, you're looking at this, it's like, how can I lose? Because you look at this 30-day chart over here, and it's like, as long as it just doesn't go down all the way to here, I'm good. But this is what gets people in trouble with GameStop and that kind of thing. You look at this IV, you look at the trade, and you're like, I'm the one selling greed. No, you're still the one who's greedy because your delta is plus 35 on a stock that's significantly overvalued. Stay away. I would say what you need to do is you got to go to the indices. So let me pull that up. I'm going to turn off Robinhood. Boom. We're going to go back to Tasty. Boom. Why is it not appearing? Oh, Tasty, why are you not showing up? There we go. I have no idea how this works. Let's go to Tasty, let's go to Grid, and let's go to the liquid ETFs. Your account needs to be at 1,300. You can get to 2,000. It's just going to take time. Instead of making one big bet on something like Sundial or Nokia, what you need to be doing is pulling up the IV ranks on here. We're going to be looking at the semiconductor fund or the TLT, the bonds. Let's look at the bonds. You're going to go to trade on the bonds. They're very liquid. And you're going to be selling stuff like the 132, 131 put credit spread for 30 cents. I know it's boring, but that's how you're going to get to 2,000 reliably, is making $1 at a time, not trying to double your money. You have probability on your side. Imagine you're at the casino. Oh, cannot see Tasty Works. Okay, let me try right now. Are you guys able to see it now? Where's the chat? Can't see option. Okay, what about now? Yeah, I realize if you can't see where my mouse is pointing, then it's very tough to follow. So I'm going to give you guys a few seconds. Can we get confirmation if you're able to see it? Okay, perfect. Good. Okay. If you have $1,000 today, what you should be doing is more of these. Is you do $1 trades anchored at the 30 or 35 delta. So you would go boom, boom. You collect a third of the width, so we move it up and down. This is about where we want to be. We want to be at about a 2/3 chance of making our money, and we want to be, let's go further out. Rather than going at 30 days, let's go to 60 days, and then you can have an even higher chance of being right. And if you want to, yeah, maybe you could do it $2 wide, but that's about as far as I'd go. This and see the volume at 130. Notice how much more there's a volume at 130 than 131. Those are the highly liquid underlyings. So if I had $1,300 today, what I would be doing is 3 times a week, I'd be making a $1, a $2, and then a $1 trade, alternating on things like TLT, FXI, all the liquid underlyings. Wow, there's a huge chat delay. I think you guys responded, and it took me a minute to see it. So I'm gonna have to figure out my setup. I don't know how the kids are streaming games if they're getting this big of a delay. So TLT is boring. It's the 20-year Treasury bond. But you know what? It's reliable. And right now it's trading at a pretty good IV rank. 21 for TLT is pretty good. You're usually not going to get this level of volatility. I mean, this is only 10 percentage points below SPY in volatility for a Treasury note. So what I like to do when I'm trying to build my account is not make big plays. It's to go into a watch list, to pull up things that are liquid, things that are a little boring, like FXI, which is China, SLV, which is silver, QQQ, which is NASDAQ. NASDAQ has been going up. Here's a common problem I see. When stocks go up, people are like, I should sell put credit spreads. That's actually the time when you probably want to sell the call credit spread, because selling into strength is more reliable. It's more reliable to fade a stock or a what would you call it, indice, than to try to catch the momentum of it with options, because the option is priced at people expecting the momentum to continue. So the logic is, by going contrary to that, you actually have both time on your side and you don't have to be directionally correct. The person on the other side of the trade who is saying that it's going to continue to go at that pace, well, you know what? NASDAQ is probably still going to go up, but it's probably not going to go up at the rate that it has been. So let's pull up like QQQ. We pulled that in the trade. Let's assume we're at a $1,000 account. What I would do is I look for that 30 to 35 delta, and I look at a flat amount. I look at what I call big ass number, 300. Look how much volume. 1,000 contracts have traded on that. It's far more liquid than the 297, where only one traded last time. So I sell the 302, buy the 300 if I'm on the put side. If I'm on the call side, let's go to another big number, maybe 325 or so. Oh, well, look at the skew. It's already bringing me to 330. We would do, where is a really liquid one? Here we go. Sell the 319 call, buy the 320. Oh, you get 50 cents. This is a great trade right here. You're getting half the width on something that is, what's the delta? Oh, 45, that's why. Let's lower it a little. Play it a little more safe. There we go. This is going to have about a 70% chance of working. 330 and 331. NASDAQ, as you know, has been going up. So the chance of it going up another 20 points on the QQQs over 60 days is just unlikely. Like, let's look at the OTM, or the in the money. 25% chance of this being breached. So if I have $1,000, what I'm doing is I'm making 10 plays on these dollar wides. I'm doing 3 a week, and then I'm managing them at 50% profitability, and my account's going to go slowly up and to the right. It's not going to be that sexy, but that's how you get to $2,000, is by making $50 a month off of this, or $40 a month off of it, not by making $600 off of one trade. Because if you win on your big trade, here's the worst part. Then you're going to make another big trade, because you're going to try to make 2,000 or 4,000 4,000 to 8. And now we're talking about real levels of wealth. And when you do that, you're going to be throwing it down to 2 because there's no way you could continue to double and win. It's Russian roulette. Eventually the bullet's in the chamber and it's going to strike you. I see people take too many risks on this. If you're doubling your money in a month, then you're not doing theta gain. You're doing delta gain. You're basically trying to guess the direction of the market. In that case, why don't you go back to buying FDs, because that'll give you the leverage to make 10x your money. But you know deep down you can't be right enough for it to work. And that's the power of theta gain, is that you have to have time on your side. To have time on your side, be willing to trade out 2 months from now. See how I'm doing the May 21? You can't be right with 6 days from now. There's just not enough time to manage the trade. 30 to 60 days is that magic intersection between time decay and gamma risk. But I disagree with trading a spread against the trend. Okay, well, Bigelow, here's what I'd say. The backtests show that when a stock is falling, risk vega increases, and people will believe that the stock will fall at a quicker rate than it currently is falling. So by taking a contrarian position, you're not saying that the stock is going up. You're just saying that the stock won't accelerate falling. So the trend is actually a misnomer in that it is, when you're trading an option, you're thinking, well, I'm trying to be right directionally. You're trying to be not wrong directionally instead. So trends cause people to overestimate the continuation of a trend. And that's why selling a put when a stock crashes or selling a call when it surges backtests better to then just randomly picking a direction. So that is now, if you're just buying stock, that's very different. But if you're selling options, that's what the backtests show. And that's why you'll often hear us talk about selling into strength or buying into weakness. I'm going to do one more call. We're about at the hour and 15 mark. That's about as long as I wanted to go. And guys, I really appreciate you holding on, because this has not been the most sexy stream in terms of production value or visualizations. I know a lot of you came to listen to Mikey, and half the time you couldn't even hear him because of the echo. So it means a lot that you guys are willing to listen to me talk about boomer stuff and how to make a small amount of money over a long period of time. We're not quite going like buy and hold. We're trying to be a little more interesting than that. But like already the Discord's up to like 10,000 people, and you guys are asking some really good questions. So Theta only and all those channels, like you guys are doing a killer job, and I think setting a real example of how to win long term on this stuff. So I'm going to take the final question. Okay. Doc with A gas. I'm wondering why some of the examples you're giving are 60 days when you usually recommend 30 to 45. Oh, great question. Okay. So we recommend 45 days to expiration because it is the intersection of gamma and theta, in which gamma doesn't pull away from you, basically taking your out of the money trade and making it drastically in the money suddenly, but theta still works on your side. The reason why I'm showing you 60-day trades rather than 30-day trades is because when you're only $1 wide or $2 wide, there isn't that much exposure to the Greeks. And the reason why is that imagine you're selling a 30 delta strangle. Well, you know you're going to have a pretty damn high theta, but imagine if you buy a 29 delta strangle to cover it up. Well, now you just have a $1 iron condor. The Greeks aren't going to be that much. It's not going to move much each day, because what's good for the 30-day short strangle is not that much worse for the 29-day long strangle. Like, it doesn't move that far. So if you have to trade narrow, your best bet against your best way to give you more exposure is to widen the trade out in time. If you can't afford to widen the legs, widen the time, widen the theta. And that's why if you want to do this dollar wide trade that you see here on QQQ, you do it at the 60-day rather than the 30-day. And that's going to allow you to win more often, because if it's 30-day, you're just not going to have time to be able to react and turn this into a winning trade, because how do you roll up and out when it's only $1 wide to begin with? You won't have enough premium. It'll always be at a debit. So if you have a small account, have time be on your side. Trade 60 days out rather than 30 days out. Now, once you have more money, if you want to trade 30 days, that's cool, but you're going to have more volatility of return. And what I've learned is that consistency of returns is as important, if not more so, than the actual returns. Because once you start losing money quickly, you stop making the rational decision. You start thinking like, oh, do I need to close this trade? Do I need to turn it into a straddle? Like, what do I need to do to defend it? You got into Theta Gang because you believe that you want to go up and to the right, like slowly over time, and be a consistent winner. Who wouldn't want to have like livable passive income where you just cash a check by writing these? Well, you have two ways of doing it. One is you take on more risk and you try to double up each time. Well, you know that if you do that within 4 or 5 trades, you're going to go kablooey, no matter if you have high probability. But if you have more time on your side, you could take on more risk and still have like a flatter risk. How do I describe this? How about this? If a 1 hour option would exist, would you ever trade that? Would you ever trade a 1 hour vertical spread or a 1 hour straddle or a 1 hour strangle? I guarantee most of you won't. Okay, well, would you trade a 1 day? Most of you still won't, because you've read our stuff. You understand that 1 day is just not enough time to be correct. That you'll make a lot of money off of Theta, but you won't capture a lot of it. It'll all be based off of your right directionally. It'll be based off of your delta accuracy. Okay. So a lot of people then decide, I'm going to sell weeklies. I'm going to sell 7 days out. That's enough time. Well, it's enough time that you get less gamma risk, but you still have massive gamma risk because gamma is accelerating quicker than theta. If you have a trade on every day at the 60-day mark, you still have stuff that will be 30 days out, after a month from now. Like, do you need to? Why enter a 30-day trade at the 30-day mark and take double the risk for the same level of return when you go 60 days out and take the front half of the risk is going to be a lot less, and you're going to get the same daily P&L. I think that's the thing that people mistake, is that they look at Theta. Let's look at it now. I'm going to show you an example. The April 16th Theta on an at-the-money put on QQQ is 16. Let's go sooner in time to the April 9th weekly, 18 Theta, 23 Theta on April 1st, 24 Theta, and finally on March 26th, we're getting all the way up to 30 Theta for the weekly. Well, 30 is better than 16. I can make double the money selling the put at 7 days. Why wouldn't I? Here's where it gets you. It's about capturable Theta. If you could capture all of Theta, we'd all be rich, because basically all of our options would expire worthless and we'd just be printing day in and day out. The closer you are to expiration, the less percentage of the Theta you capture, because it's covered by gamma. It eats away at your Theta because the option is going to be in the money or closer to the money more of the time. So a 30 Theta at the money put, you're only going to be able to capture 10% of this on the weekly, which is 3. Compare that to the monthly. Not just the monthly, the 60-day. See how it's at 11? You're going to be able to capture 25% of the theta because there's less gamma. What's 25% of 11? 2.8 or so. That's about the same as the 7-day. So you're getting actually the same capturable theta, but you're taking on far less risk because dollars to dollars, the $6 day or the weekly one is far more risky than the 60-year day because the 1 day is riskier than the 6-day. So why take on the risk of the last 14 days if you don't get extra return? It doesn't make sense. The only one it makes sense for is the market maker. And that's because of liquidity and the slippage that they actually... that's why you could sell the 7-day or the 14-day FD. It's not because someone on Wall Street Bets is buying it from you. It's because the market maker is arbitraging the slippage of the trade versus other longer positions that they have. So this is the no-go zone from 1 day to 21 days in which you shouldn't have trades on and you don't want to enter them. The 30 to 60 day is the enter zone. That's when it's best to enter the trade because you get the most capturable theta at the least amount of risk. And you ride that 60 day all the way to 21 days. If you make that 30-day trade, you only have 9 days that you could ride until the gamma starts intersecting and you start collecting 20% of the theta, 15% of the theta, 10% of the theta, as opposed to 25%. Historically, at 60 days, you can capture 25% of the theta. And that's not bad. You can make a lot of money if you're capturing $3 a day off of these trades. So, hopefully, Dog with Egg, that answers your question on theta decay being slower the further you're out, but being more capturable in terms of percentage of theta. That 25% of theta is capturable with ideal... how do you compute it? You can't. It's not a Greek. You have to backtest it. And the way that you get to 25% is by a combination of the 3 techniques we've mentioned for managing trades, which is close at 50% profitability, close at minus 200% profitability, roll out when on the dance floor, which means when your short leg is, or the break even is breached, roll out at the 21-day mark or the 14-day mark, depending on where your risk tolerance is. That's, if you do that and you write a back test, you'll notice that at around the 45 to 60 day, that's when 25% of the theta is capturable. But if you do that at the 7-day without management techniques, because you really can't once you're in day 14, that's when you get to about 10%. So there is no Greek for a capturable theta, but on some platforms, on Tasty, they'll give you a, let's see if we hit review. They don't have it on here. They have it on the web. They have a formula called ROC. Let me see if I can pull it up for you guys. 1 second. Okay, I'm going to turn off Tasty and turn on the website. There we go. And we're going to trade SPY. We're going to sell naked put at 390 at 45 days. See this thing that says ROC or T-Rock at 0.13? That is the capturable theta. That is the Tasty return on capital. And it's done in a way that I wish they inverted it. So instead of saying 0.13, they would say how much of the theta you capture, so the inverse of that. It's basically saying that how much of this premium are you able to capture through daily decay of theta. So the number will actually, it doesn't increase when you go lower in time, but the gamma does. So let's see what happens when I sell the 7-day. It should be slightly more of a T-Rock, but okay, damn it. It doesn't do the capturable theta on here. That's the raw. See how it's 4 times more, which was exactly the theta thing that I talked about? It doesn't go over that. Unfortunately, that's a complex calculation. But if you just think about it, you can never capture 100% of theta because your options will be wrong sometimes. They'll go in the money. Otherwise, why would anyone buy them? Even if you sell super wide, like the 6 Delta Strangle, it's going to get breached eventually. The day of GameStop hits everybody. So, let me go to here. Let me think. Don't take on risk unless you are compensated for the risk. If you gave me the same amount of premium for selling QQQ versus SPY, I'll sell SPY because QQQ or NASDAQ, that's more volatile. Like it went up 3% a day and went down 3.5% when SPY only went 1.5%. Why would I take on extra risk? So when you sell options within the 14-day window, because you don't capture as much of the theta, even though theta is higher, your daily P&L doesn't increase by going in the 14-day zone. So why would I take on that extra risk? I'll always take a safer path if the reward is the same. If you had the difference between a target job that paid $10 an hour and an oil drilling job at $10 an hour, what would you take? You take the target job, because unless it's Thanksgiving and fat people want to grab their TV sets, it's going to be a lot safer to be working at Target than it is the oil fields. That's why they give you more money for working oil fields or working fisheries, working on the crab boats. So I treat it with Theta is that I don't go for the highest P&L. I go for the best value. And that's the intersection between risk, reward, and that for me is usually within 30 to 60 days on the indexes rather than the tech stocks. The tech stocks give you the best rewards, but that if you look in Market Talk or